Okay, well, good afternoon, everyone, and welcome to these sessions as part of the Bristol Festival of Idea. And the session that has been discussing since this morning, is it time for universal basic income? And with me today for our panel that will explore the implication of the universal and the relationship between the universal basic income and fiscal and monetary policy. With me, as I said, are Bernhard Neumärker, a professor of economics and director of the Department of Economic Policy and Constitutional Economic Theory at the University of Freiburg, and Thomas Palley, an independent economist and author writing about, obviously, economics and finance, living in Washington, D.C. And Thomas is the founder and co-editor of the Review of Keynesian Economics. So welcome, Thomas and Bernhard. And welcome to all participants. I can see then we have now a few people joining the chat. So you know the rules of the game. So we're going to have a presentation by our two speakers, and then we will open the Q&A, and you can join in all sorts of ways, but feel free to fire the questions using the chat. And then we also have a system of selecting the most voted questions on this topic. So I will start, I will go, alphabetic order. So we start with Bernhard and ask him to to give us his thoughts and insights on this topic. And I believe, Bernhard, you have a PowerPoint presentation or some slides to show our audience. So Bernhard, it's over to you, and I'm sure you are very adept to this technical.
Okay. Thank you very much for this nice introduction. I try to share the screen now. Here it is. So I hope you can see it. Perfect. I would like to contribute to a specific idea, which is very important, not only to fiscal policy, but also to social and economic policy, namely a concept of myself, which is called the net basic income. And it's on UBI in times of crisis. And one can recognize that, at least in the German case, it's easy and even easier than one might think to finance and to make a UBI productive. Here we have published it in a previous version on the homepage of the Freiburg Institute of Basic Income Studies, and it will be published probably this year also in the Journal of Markets and Ethics, so that you can read more information on the ideas. So in Germany, we have a lot of political relevance of UBI with respect to different topics. First, a basic pension. This means for old aged. 1,050 euro per month was the idea behind it. It's not completely realized due to the fact that we still have not only eligibility and entitlement testing, but also, once again, means testing and targeting. Then we had the idea of the climate bonus, especially from the Social Democrats, but it's also not implemented. We will see if this will be done in the next step together with the Greens, for example, in a coalition. Then we have from the more conservative side the idea about a citizen fund, a supplementary pension for everyone the same, round about 145 euro as a return to public capital. The idea is that the state employs a public capital fund which grows and grows and then can finance the citizen fund. We have a lot of field experience in pilot studies and lab experiments now. We have the argument, especially during the crisis, that we need more unconditioned money to caregivers as well as to protect the problem of old age poverty. And last but not least, the German Supreme Court argued we need some freedom from sanction for dignified basic social security, and this should be around about 500 euro or so per month, which is then not based on the workfare system and on means testing. But now, during the Corona crisis, to the COVID pandemic and the crisis management, we have seen that in fiscal policy, and you will see it with the net basic income concept, we have additional financing options and especially offsetting potential of public expenditure positions to finance it very easily. The financing problem is not there. It will help, as usually in social policy, in questions then of substituting and complementing old-fashioned social policies. And also you will see that I attack a problem of the functional inequality of functional income and justice, and also government issues. Even for economic policy, which is usually completely ignored in the basic income discussion, it may be helpful in supporting more specific economic and environmental policies. I will present you 2 examples for that, especially in times of crisis. So if that holds, then it is definitively and now time for universal basic income. And the question of the conference, I would say, will be answered completely by my contribution, as it was before that by other contributions as well. So during the crisis, the net basic income can be first an emergency measure and in the end a reform action, a basis for reform action and implementation device. Here that graph is what I will not completely explain, but you see here what I will tell you with the net basic income implementation is that it first may work as an emergency measure for crisis management, especially for freelancers and so on and so forth. And then you have a first step towards a gradualistic implementation of basic income. If, for example, politicians in direct democracy, indirect democracy, or the civic society, or even authoritarian governments believe that it's only for managing the crisis valuable, then they move back in better times to a workfare system. But if they believe that this should be only a first step to sustainable reform towards UBI, then we would complete the gradualistic reform with NBI for crisis and full UBI, participatory UBI, for example, for pre and post-crisis situations. So the basic idea of the net basic income, and therefore it's novel, it is clearly that you see in usual state measures, the entrepreneur, the worker, and the solo self-employed, the freelancer, receives state aid measures, and with these aid measures, he has to pay rent and tenure, and he has to pay interest on capital and redemption. So therefore, the payments to the individuals are not only for them, they are also for the rent income seekers and for the capital owners. So therefore, my approach is very nearby that what Guy Standing said. We are living not in a productive capitalist society. We are living very often under the constraints of rentier capitalism. And here I would like to regulate rentier capitalism with the net basic concept. The problem is now with these traditional emergency measures that you have unforeseen contingencies. Yes, these are targeted, they are means tested, they want to realize target efficiency, and the problems is you see many non-take-ups because many individuals fail with some criteria of taking it up. We do not know from an ex-ante conception if we can solve the uncertainty effects of the crisis completely, because we have unforeseen contingencies which cannot be regulated neither by means testing nor by target efficiency. So therefore we have low reliability and lacking predictability for the citizens. And what we have recognized due to the traditional emergency measures was a lot of insolvencies, of non-take-ups, of omissions of system-relevant groups. And the idea behind the approach is now threefold. First, you see here there exist individuals who would receive under the traditional measures always unearned income. And this unearned income should be also treated when there is a lockdown, just like earned income. So the rentiers should be treated equally. If not, then we have, in the end, high inequality between rent income and a working and productive performance income. And this would be called an unfair rentier capitalism. On the other hand, these unearned income owners, receivers, should also pay a solidarity and fairness payment to the society in the way just like a freelancer or a restaurant owner has to pay due to the lockdown of his payments. And in the end, an equal payment for everyone is a very simple governance concept where you don't have to check system relevance, where for the distribution of the money, we have privilege freeness because not everyone tries to fish the common pool, the money completely, so that special interest groups would not be interested in seeking more basic income, for example. Yes, because it's distributed completely equally, you cannot change it. And here is the concept of the net basic income. You see, if there is a shutdown, the double red lines, no one of these persons, of the entrepreneur, of the worker, or of the freelancer can receive anymore his market income, then there should be a lockdown in the payment chain also for the rentier. That's M with green double arrows, green double lines, and also capital payments from the entrepreneur, the worker, and the freelancer. Interest on capital and redemption should be also locked down artificially. Why is that possible? Only because everyone receives a net basic income, which he needs only for consumption during the crisis. That's very important. Yeah, only for consumption, because you don't have to pay rents and interests and redemption. The capital owner and the landlord do not receive the rents and the redemption rates, yeah, but they also receive net basic income, just like the entrepreneur and the worker and the freelancer, which do not receive their money due to the lockdown necessary for health protection. So we have two examples, very simple, two examples. If you have, for example, what we have recognized in Germany, if you would like to promote training positions so that an entrepreneur still is in action to train the younger ones, it will not work, because the entrepreneur said, it's nice that you give me for trainee program 400 euro for each person, but I have to pay my rents, I have to pay my redemption. That's too much. I will not educate anyone. Under NBI, yes, if there is the lockdown again for everyone, the artificial as well as the one induced by health protection, then training positions and training support may work. This is a specific economic policy and education policy. Why? Because the entrepreneur has not to pay rent and redemption. It's the same with energetic renovation subsidies. That's very important to notice. Yeah. Why? Because here you see it's the same with the problems to pay rents and interest on redemption. Therefore, an entrepreneur or a civic society, a person, a citizen may stop an energetic renovation because the subsidy is not enough, and he will reject the program. Yeah, if you have net basic income, then you will use the energetic renovation subsidy once more, and the program will not break down. Yeah, so that environmental policy is still at place under the crisis when the net basic income works. Therefore, you see more than social policy and fiscal policy implications. Last aspect here, what I would like to mention, we have calculated it by the argument, do we have basic income related parts of the social budget? We calculated it for Germany. These were round about 467 billion euro out of the national social budget. The total cost, if we would pay for everyone, only for consumption expenditures, 550 euro, and for children a little bit less, then we have a BI-related social budget which does nearby cover the total cost for this net basic income. If we then calculate also in the basic income related Corona emergency aid of 150 billion euros, we have calculated it, all these things which are paid nearby unconditional simple cash transfers, then we have a positive difference. Yeah, we calculated it. Nowadays, the difference increased due to additional programs with BI-related Corona emergency aid programs, and because the national budget for 2019 is now higher than that was for 2018. And the fiscal implication is that we can pay for such a crisis basic income without any problem. The task is now that if we implement this NBI in times of crisis, what we have still at the moment, then we know that at the times of prosperity we can switch back to the workfare system, old traditional workfare system, or we can implement a full UBI, for example, participatory UBI during times of prosperity, and moving back to times of to the NBI in times of crisis. So my final hypothesis, my proposition would be a BI society in such a way with crisis and participatory UBI would be more successful than a short time payment and a workfare society, what we have at the moment in Germany, and it will pay for every modern country. And at the moment we investigate if it pays also for more developing countries. Thank you very much.
And so basically what you have, just to recap, you show us the case of Germany during the pandemic with this net basic income, and which is what you define is an unconditional cash transfer, but that's only for a crisis. And you advocate the extension of the universal basic income as an ex ante measure to protect people from uncertainty, whatever the uncertainty comes from. So basically, in other words, if we had the UBI in place in your specific case of Germany before the crisis, then would have been an immediate and automatic way. So people would have been protected against the crisis and against the uncertainty that the crisis obviously brought. And without creating the whole structure to try to reach everybody and pay people who are freelancing, self-employed, entrepreneurs, people who didn't. So that's the key issues about it. So it would be, from a fiscal point of view, would be more efficient to have a new BI rather than switch to an NBI, so net basic income, at the type of crisis.
Exactly. Yeah.
Thank you. And then again, we will come back with a question from the audience and also for the debate and the Q&A. Now I turn to Thomas for his presentation, 15 minutes presentation. And I believe that you do not have any slides or PowerPoint to show and to share on your screen with the rest of the audience. Okay.
That's correct.
So over to you, Thomas, and your 15 minutes.
Okay. Now, I've interpreted this session to be about how to finance a UBI. But before getting into the details, I want to state that I believe a UBI is both feasible and desirable. But I also believe a UBI will need to be paid for via taxation. Budget deficits and alternative monetary arrangements can provide some financing, but they cannot provide enough for a mature UBI. In my view, proponents do their cause a disservice by arguing they can. Such arguments distract from the merits of a UBI, which fully justify taxation, and they undermine the case by identifying it with fringe monetary theories. Now, how does the system work? The financing of a UBI will depend on the details of the system, and that raises two fundamental questions. Who qualifies, and how much is the basic income payment? Now, who qualifies is a political choice. I view a UBI as being for working people. The goal is to ensure a degree of economic comfort and security so as to give people control over their time so that the fruits of economic progress get harvested by all. So in my framework, a UBI would be paid to all adults aged 18 to 65. Those under 18 will be covered by child support systems, and those over 65 will be covered by retirement income support systems. Now, as regards the amount paid, a UBI will need to be phased in, and that introduces a distinction between a transitional and a mature UBI. The mature system will cost much more. I would like to see a $1,000 a year UBI introduced immediately, and the goal of a $12,000 UBI within the next decade. So this is for the United States that I'm going to be working on. The pace of the phase-in would be contingent on economic developments, and the system can be further expanded if warranted. So the next step is some basic back-of-the-envelope cost calculations, and here I'm going to use US data. In 2020, the US population was 331 million people, and there were 203 million persons aged 18 to 65, representing 61.3% of the population. So my version of a UBI would cover 61.3% of the population. Now, in 2019, US GDP was $21.4 trillion, and I'm using American trillions, which is 1,000 billion. UBI payments would be part of taxable income, and so let's assume a 10% tax clawback. If you put those pieces together, a 1,000 per year UBI to every adult worker, 18 to 65 years old, would cost about 0.9% of GDP, slightly under 1% of GDP. And a $12,000 per year UBI would cost 10.2% of GDP. Now, a 1,000 payment is clearly immediately feasible and can be put in place with little or no disruption. But a $12,000 payment, though it's feasible, is 10% of GDP, and that's a big transfer, and it would therefore need to be phased in. And getting ahead of the story, that explains why taxation will ultimately be needed, because it's the only way to raise that amount of finance. Now, we should not be scared by these numbers. When the welfare state was introduced in the first half of the last century, it also needed a reconfiguration of resources and large transfers. And we all know the welfare state saved capitalism from itself. Today, capitalism confronts new problems, and a UBI represents the needed response, and it will also need huge transfers. So advocates of a UBI should not be shy about admitting that. And also, I would say that in connection with the creation of a welfare state, it took over 50 years of political struggle to get the welfare state in place. And the political implication is that it's never too soon to get started on a UBI. And that gets to the crux of the matter. How are we going to finance a UBI? What I'm going to do now is run through some proposed options. And my conclusion is that a taxation will be needed, and there's no avoiding that. Now, the first option is budget deficit financing. Over time, the government debt should grow at the same rate as output to maintain a constant debt to GDP ratio. That creates space for growth to finance some deficit spending, but that space is diminished by interest on the debt. There's a very simple formula, which I'm not going to explain now, that determines the budget space that is provided by growth. It depends on, first, the growth versus interest rate differential, which determines the growth dividend. And second, it depends on the debt to GDP ratio, which determines the base on which that dividend is paid. So obviously, what's critical is assumptions about those parameters. So let's assume the debt to GDP ratio is 1.5. That's debt to GDP is 150%. Debt is 150% of GDP. And let's assume that the growth interest rate differential is 1%, 1 point. In that case, budget financing deficit yields 1.5% of GDP. That's nothing near enough to finance a UBI. Let's go full Japan and assume the debt to GDP ratio is 2.5, 250%. In that case, the budget deficit financing yields 2.5% of GDP. Still nothing enough. Let's do a third scenario. Let's go full optimistic Japan. 2.5%, 250% debt GDP ratio, and a 2-point growth interest rate differential. In that case, you get 5% of GDP, free debt deficit financing. We're only halfway to financing a UBI of $12,000 per year. And we've been tremendously optimistic about growth and a continued zero interest rate environment. So we will have loaded up on financial risk. And if growth slows or interest rates rise, the deficit dividend will fall. And we'll also likely face a financial and economic crisis because the accumulated debt will need to be refinanced at higher rates. Now, that is actually the good news. The bad news is that government is already running budget deficits that are significantly above the amounts that I've just calculated. For the last 30 years, average budget deficits have risen as a percentage of GDP, and budget deficits have risen very sharply since the 2008 financial crisis. Between 2011 and 2020, the UK average deficit was 5.2% of GDP. In the US, it was 7.7% of GDP. And what I'm saying is we're already fully using the budget deficit dividend. That means financing a UBI will either need tax increases or spending cuts that make room for it. Now, increasing the money supply is another proposed alternative. That's modern money theory, which says that we can use money finance deficits. We can just print money. Now, that claim runs into similar difficulties that those I've just described with bond financing. I'm not going to describe the many criticisms of MMT. I'm just going to talk about those that are relevant to financing a UBI. First, I want to point out that money financing is not free. That is because central banks pay interest on reserves as a way of setting the short-term interest rate. Second, a money-financed UBI will require permanent, ongoing increases in the money supply. But as with debt, the money supply is also subject to a GDP ratio constraint. And increasing the money supply to GDP ratio brings the same risks of financial fragility, inflation, and monetary disorder. And once again, we can do some simple estimates of the financial space provided by money deficits. Remember, government money is a liability of central banks. In the US, before the 2008 crisis, the liability to GDP ratio was 6%, just 6% of GDP. After 13 years of quantitative easing, the ratio is 35% of GDP. Now, if we assume a very optimistic growth interest rate differential of 2 points, in that case, the money financing dividend from increasing this existing stock at the rate of growth is just 0.7% of GDP. I mean, that's nowhere near the 10% cost of a mature UBI. And if you double the liability GDP ratio, let central banks keep printing money for another 10 years at the same rates so that the money supply goes to 70%, the liabilities go to 70% of GDP, you still only raise about 1.4% of GDP. So everything that you hear about modern monetary theory being able to finance a UBI just does not add up. It doesn't raise the required amount of money, and it blows apart all the ratios that have historically been associated with stable economic growth. Now, another proposal is positive money. That's where proponents advocate a form of narrow banking, the twist being that the central bank now provides bank deposits in place of private banks. But once again, the dividend from growing the deposit base along with GDP does not yield enough money. In 2021, US sector bank deposits were equal to 18% of GDP. Let's assume a 2-point growth interest rate differential. That's going to yield you just 0.36% of GDP, which doesn't get close to the 10% number. And again, there are very serious criticisms of positive money. It would likely raise bank interest rates, it would lower growth, and it would create financial fragility in the banking system. A fourth way of raising money is to cut government spending in certain places. And here we get in touch with some real possibilities, but it's going to depend on each country's particular position. In the US, the bloated state of the national security budget and our awful healthcare spending create a lot of room for space here. In 2019, the US government spent 4% of GDP on defense. By the way, that was more than the next 11 largest country spenders spent. If we cut defense by 1% of GDP, that would free up 1% of revenue that could cover a $1,000 per year payment. That's something, but nothing near enough. The real opportunity is in healthcare. The US spends the most in the world. Switzerland spends the next most per capita. And the US also has very poor healthcare outcomes. If we were to reduce our healthcare spending per capita to Swiss levels, we would save 4.7% of GDP. That would be enough to pay almost every adult worker $5,000 per year. In other words, remedying US healthcare inefficiencies could make resources available to cover almost half of a $12,000 a year GDP. That gets to the punchline. Taxation is going to be needed to finance a mature UBI, but unfortunately, perhaps owing to the chilling effect of neoliberal politics, some UBI proponents shy away from that option. In fact, there are very strong economic and political reasons for tax financing, the most obvious of which is it raises the necessary revenue. We have a challenge, which is to combat what I call the triple crisis of neoliberalism, climate change, and prospective technological unemployment. Financing of a UBI should be consistent with and assist that goal, and we can do that via a combination of progressive income tax, corporation tax, and environmental taxes like a carbon tax. So to conclude, in my view, a UBI is needed, desirable, and feasible, but it's going to require significant financing. An annual UBI of $12,000 per adult, 18 to 65, in the US would cost roughly 10% of US GDP. Advocates should be open about the cost. The welfare state required resources, and so too will a mature UBI. Some advocates are reluctant to talk about tax financing for fear of political backlash. I think they're wrong. A UBI can and should stand on its own merits. and claiming that it can be financed by appeal to free lunches and fringe monetary theories distracts debate and risks tarnishing the idea. Thank you very much.
Thank you, Thomas. And let me start. We've got now about just a bit more than 20 minutes for our Q&A. But let me start from your last point, which is you rightly tell people that there is no free lunch here. And so is the UBI is a great idea. And in this session, we don't even discuss whether it's good or bad. We actually are focusing on how we pay for it. And so basically, you're saying that there isn't a free lunch, and the issue is one of trade-offs and policy and political choices. And so your suggestion is, having explored a number of options, then the best one is to turn to taxation. And so basically a mix of progressive income taxation, corporation tax, and environmental tax. So, and at the end of the day, that is the way forward if in order to pay for this UBI. As you said, is expensive and is quite intuitive then to provide a universal basic income to the population, and regardless of many people we have, it's an expensive endeavor. And in particular, if we want to make something that is significant and is not just money that cannot really be particularly useful in the sense that it's not high enough. Let's open the debate here, and I'd like to bring in also Bernhard, and you gave us this interesting overview of Germany, but again, I'd like to turn to you and see what assuming, and we take the view then UBI is a good idea. So how are we going to pay for it? And in particular, I would like to get on the German case to see how, in Germany being a fiscal conservative country, I really like to know how this UBI, but we know how NBI has been funded, but how a UBI, which is not, an experiment for a small amount that affect a small amount of people. We got plenty of these in Europe, and recently, I mean, Italy got a UBI, but again, is restricted. Spain got a UBI, but again, there are experiments. Sorry, apologize, I got my headphones. The UBI is restricted to certain groups, so it's more an experiment than a universal measure. So I'd like to turn to you, Bernhard, and maybe you can tell us something more about how Germany, how can be paid for UBI in Germany.
Yeah, one aspect which is related concerning the total amount to the informations by Thomas, I prefer the idea of a so-called social dividend as a share of the GDP, for example. Yeah, however you finance it. Yeah. For example, at Freebies, we investigate in pure consumption tax finance. Yeah, here you have seen that there might be more room, especially for countries with a well-developed social state like Germany or the Scandinavian countries. Yeah, that there are a lot of offsetting options. Yes. The NBI is then transferred towards a full UBI due to the fact that you will not stay in crisis. So this means you have more tax revenues and you have more potential than for organizing and creating, for example, or running public deficits. My argument, for example, for Euro bonds, yes, if you would like to run it all over Europe, yeah, the idea of the Euro dividend is that you need a common pool. That's very important, and in the European Union, the common pool could be the integration rent of the European Union. Yeah, we earn a lot of money. You see it at the moment. We earn a lot of money. Compared now to Great Britain and its specific problems to move out by Brexit, yeah, with integration, with the integration rent. And you can try to tax, at least ideally, the integration rent just like a profit tax or a tax on the GDP generated by integration rent. And then you will see we have a lot of money for it. If you still try to solve it in a national way, concerning the full basic income, then you have, for example, what I have missed in my presentation, you have to move to a reform track. And in the reform track, due to problems with the old-fashioned social insurance system in Germany, even in Germany, we will run into old age poverty for a lot of pensioners, or we can become pensioner when we are very, very old. Both is what we do not want, So therefore, we could solve this also by an offsetting additionally of our social security system for the pension system, only in the long term with a certain transition time. But then we have a lot of money for offsetting. We have to take care that specific programs have to stay specific because they are not for general coverage of individuals. They are for specific social insurance. These are not BI related payments, but with that and an additional amount from tax revenues or running deficits or creating money should be enough. For me, it's really not a question that we cannot finance it. It is, as Sarah Davala said it, the idea that the individuals are thinking how to employ the money they have organized by all their performances at the end in terms of GDP.
So basically, sorry, if I understood correctly, you suggest to shift around some of the expenditure for social security from within the welfare state
Unemployment
to support
completely.
the basic income. And I can see a potential shift between unemployment benefits and the universal basic income. But you also mentioned pensions, and so suggestion of shifting what we say a long-term entitlement of people who actually are entitled, and they sign a contract when they join the labor force, maybe in their 20s, are expecting to retire in their late 60s with a certain amount of pension. So, and if I understand correctly, your suggestion, it seems to me then is not feasible nor fair to actually move, or unless you find a way to redistribute, but I don't see, frankly, I can't see it. The arithmetic doesn't quite add up here. Take a bit of pension, giving to the basic income, the pensioner will get the basic income, but obviously it would be less than what they give away for this. Sorry, this is very basic and simplistic description, but I'm like to get your reaction to this, and especially if I understood correctly your suggestion.
Okay, I try to be short. You clearly need for a complete transfer or transition of the pension system. There are two roads, so to speak. The first one is that even in Germany, we see that if we, with the traditional system, if we do not a lot concerning its financing, it will collapse. And for many, it will indicate old age poverty. That's the first thing. UBI is insuring against old age poverty if the amount is high enough. What the real amount is in Germany we discuss 1,000 up to 1,500. For example, that's, I would say, a matter of degree. The second thing is if you move to a UBI system and you would like to transfer the pension system also, you can say, now we move to UBI, and from that day on, all the old and entitlements due to the old system, are still paid for the individuals who have the entitlement, and the property right to do that. But from that day on, they will not receive it. Do you know what I mean? Only up to that day, for everyone who is in the old-fashioned pension scheme, they still receive up to the end of their time as in a share that in accordance what they have paid in. This will be not too much, because you can see if they would stay in the old-fashioned system, it would also decline. Yeah, and if you take this into consideration, the younger you are, the more attractive a participatory UBI will become. Yeah, and there is a certain trade-off to transfer this old system into a new one, but it's possible. Yeah, we have done it with other systems also. It's possible to do that, and then the older ones will receive a little bit more money because they have paid in the old-fashioned system. Yes, but this will end up after 10, after 15, or after 20 years.
Okay, thank you. I'd like to move on also to ask another question and also pick some of the questions in the chat. And there is one which is actually very relevant, and it is the inheritance tax. So basically, this is a proposal, for example, that is on the table in Italy, and obviously has not been particularly successful. And the proposal is to increase the taxation by a sort of pretty marginal amount, and taxation above the threshold of 1 million euros, and distribute this as a sort of universal basic income for the youth. And obviously, and there is a question in the chat, we could think and be even more bold, and then to bring some of this system and inheritance tax a bit more, taxing a bit more wealth above a certain threshold, and use this to support UBI. Is there something then you have looked into in your research? Do you have any insight in this proposal, and why none of you hasn't mentioned it?
Well,
Maybe
listen,
in the United States,
this
it's politically very difficult.
This is a 15-minute presentation. It's silly to think that we're going to present everything. This was, you asked to give some thoughts, and I identified some major possibilities. All taxes are on the table. In the US, it's quite clear we need a progressive inheritance tax with very high rates at the top end, where where the dynasties exist. Also in the US, it's very clear we need to change our capital gains tax law so that at death you don't get a capital gains tax free right. You don't get the step up basis issue. These are technicalities that we were encouraged not to go there, so that's why we didn't go there. But it cut us the slack of saying that all progressive taxes are on the table. I do want to say some things though that I've heard in the comments so far. First of all, I was trying to describe what I call a true universal basic income. It's universal. The little pieces of it, some here, some there, I think undercut it. My vision is to give working people ownership of their time, which is the ultimate goal of economic progress. They should have some comfort and security and be able to own time, which I think is the most important thing in life. And that's what this is about. There are going to be problems of, we have an existing piecemeal system, how to integrate the pieces smoothly so they work together. I focused on 18 to 65-year-olds. There's a retirement income issue, and then there's a minor issue when people are children under 18 years old. That's point number one. Secondly, it has good stabilizer properties, but I don't think that, and that's a marginal feature about the universal basic income. The real thing is to get it on this table so that we really do address the future, which I think is a future of technological unemployment, and a future in which there will be the possibility of owning time, because progress is going to be fantastic. But if we don't put the right institutions in place, what could be fantastic will turn out to be a curse. And lastly, one point that Bernhard made about Eurobonds. Yes, Eurobonds are essential to making the euro function well as a currency system. But every bond is subject to the same bond deficit algebra, that it cannot grow above this growth minus interest rate differential, or it becomes explosive. And there must be some limits to those ratios. I do see some question here. Somebody has got something about World War II was different. World War II was different, but I would never use World War II to characterize normal experience. We can push the system to fantastic extremes, fantastic productivity levels, but to sustain it there, when people were doing forced saving, everyone, there was nothing in the shops to buy, and people were saving for patriotic purposes, buying war bonds, etc. It's not a good measure of how a system can operate permanently in peacetime. It's how it shows, it's a tribute to us, to what we can accomplish under stress. But it cannot be the model and is not a good guide for what can happen in peacetime. I'm just responding to one question there in the chat room.
Okay, and I think Bernhard wants to get into this.
To add something to the advantages and also disadvantages of peaceful times, is what Joseph Stiglitz called the dynasty of savers, or saving dynasties. That you have more and more persons, but a very small crowd who are accumulating capital more and more. This is to the problem of the inheritance tax, and the other ones cannot follow them. For a free so-called, now you see, I'm totally conservative. For a free market economy, it's very important that we have to some degree equal opportunity. And we don't have it when we have these saving dynasties. So therefore, for that, an inheritance tax may be also useful. Why? And now that's the problem with crisis, and also the problem, especially with wars, is if you have a war, then from time to time capital is redistributed or destroyed. Therefore, these dynasties may also fail. They did only partially. We know it in Germany, even for the losers. They more or less came back. But in peaceful times, the inequality will become larger and larger. And then the promise of the free market economy, that everyone can have a part of the cake if he's working very hard, is wrong, because we move more and more towards this rentier capitalism, where you can earn very, very easy a lot of unearned income, and others who are productive cannot be a part of this high level of income. And that's a big issue, and also a problem for redistribution. And if the inheritance tax helps here a little bit, then it might be milder than they think. In Germany, we have also the idea of extraction, of income and assets and so on, and in the housing market and so on. That's why, because we say there's a lot of problem with reckless investors in the housing market who have a lot of the land owned. And that's a big issue and a big problem, which we cannot solve only by arguing we regulate it a little bit. For that, we need, what Thomas said, a really full security that everyone can do its best and be creative for himself. And then we will see that the individuals will become even more creative, because they know they will
sorry,
have
Bernhard, can I stop you there, because we got literally a few minutes, and I'd like to conclude with a question to both of you and try to wrap up also the question we have in the chat. And so obviously it's clear then the universal UBI is a good idea, but it's one then it's expensive and it implies trade-offs and policy choices. And so my question to both of you is, obviously taxation is the way forward to support and fund this initiative. But what about, and again, back to your point about redistribution, and what about a reform of the tax system in our countries, in Germany, in the United States, in the UK, in Italy, and so on, that really look at the issue of the redistribution, so an overall reform. And some people in the chat talks about land taxation, we got inheritance tax. So an overall reform that actually act as improve the redistribution mechanism. So, and then to make sure then people, and then we can actually think about UBI, but also a better and a more inclusive welfare system, particularly the healthcare system. So, what would be your answer to this?
Well, I'm for it. The tax reform in every country will be very contingent on what the current tax system is. I'm a Georgist. I'm very for taxing land. I'm very for inheritance taxes, progressive taxes, corporation taxes. All of them make tremendous sense. There's one tax I am against, which is a wealth tax. I think it's just just create business for accountants. It's very arbitrary, hiding wealth. You just get into strange games, and the stock market goes up these days 1%. Am I 1% wealthier tomorrow? And then what happens when it goes down 2% the day after? This is fictitious wealth, these valuations. What happens is when inheritance taxes are critical, that's when wealth gets transferred, and they should not be able to be transferred in these massive ways and on this incredibly tax-favored basis. Income taxes are the way to claim back the productive part of the economy and redistribute it. I had one more thought. It's passed me by. I'll pass. But obviously, yes, these tax reform of this sort is needed. No, the point I was making was that I tried to make also in this paper. I've looked at the US. I don't know what the European economies are like, but in the US, we have a lot of space. In some ways, we're almost lucky. We have a lot of space to reallocate government spending. Our defense budget is hugely bloated. As I said, 4% of GDP, more than the combined amounts of the 11 next spenders, China, Russia, the United Kingdom, Saudi Arabia. All together, they don't spend as much as we do here. And our healthcare system is abysmal. Not only does it produce terrible healthcare outcomes, it's incredibly expensive. I said, I think that the total spending that's out of pocket and government is 16.9%. The government share is 14.1%. That's in the form of tax giveaways to subsidize health or straight plain spending through government programs. We can get that down by at least 5% of GDP. So we, in a way, if we're smart enough, and we could persuade people to see how this is such an inefficient system, we in the US, we could be very quickly close to a UBI. In Europe, I don't know, because you have much better healthcare systems. There's not so much fat. I don't think there's very much fat at all, in fact, in the British system to cut. In fact, it probably needs more resources, but it's delivering at least.
Yeah. Okay, I think we are now at the end of our session. I think there are so many open questions on the table, but thank you very much to our participant, Bernhard Neumärker and Thomas Palley, for these stimulating presentations and discussions. And thank you very much to all of you who followed us today. As I said, this is an ongoing discussion, and we hope that it will become part of a progressive agenda and not just an experiment to be taken up from time to time. And thank you very much. And then have a good rest of the day.
Bye-bye.
Thank you very much for this perfect moderation, and thank you to the audience.